Hello, this is Dr. Janice SETO, and I'm the instructor for this section of the course BAT4M, and it's the accounting course in grade 12, the CPU Canadian Pre-University program at Taylor's College. Welcome to sunny Subang Jaya, and it's the last day of January. I would like to go over some homework questions in order to prepare for Thursday's test. I've had previous videos focusing on some of the earlier questions, and I thought what we would do is look at question, I think, 14, and then we'll see how far we get in this 15-minute video. Let's take a look at our textbook. And so, as you can see, our textbook is Harrison Horngreen, and it's International Financial Reporting Standards. The question I want to do is question 14, and where was it? It's around here somewhere. Just be patient until I get it. And here we are, 14. There we are. Sorry, it's 14 of this. There we are. Using the accounting vocabulary and identifying which of the four accounting statements, financial statements, that each of these different items pertain to. Well, this is fairly easy. Remember, the four accounting statements that we use in the annual report, which you'll be referring to for your ISU, remember you're all choosing a different company, start off with the income statement. From there you have all the information to prepare statement of changes in equity. Remember, A equals L plus E. AL, assets equals liabilities plus owner's equity. The income statement will help generate the information as to retained earnings and, as I say, the net income, which will then impact on the statement of changes in equity. Then using the final figures that you get for the equity, then you can prepare an updated balance sheet. And remember, balance sheet is also known in some parts of the world as a statement of financial position. Anyways, from calculating, for preparing the income statement, statement of changes in equity, and balance sheet, then you can do the statement of cash flows. And as you can see here, we've got several items, and we can define which one goes where. Now, 3 of the items appear on 2 financial statements, and 1 on on 3 of them. Let's take a look. Dividends. Now, where do they show up? Yes, dividends show up in your changes in equity and also your cash flow. Salary expense. Salaries, remember, revenue minus expenses equals net income or profit or gross profit. And there we are, salary expense. Do we have any other expenses here? No, not right now. Inventory. Inventory shows up under the balance sheet. It is an asset item. What else are asset items here? Well, cash. In order to list in the balance sheet, you go under order of liquidity, and so cash is easiest to convert into cash because it's cash. So you've got cash, inventory. Anything else here that is an asset? No, I don't see any others right now. All right. Next, sales revenue. Well, this is an easy one. Remember, income statement is revenue minus expenses equals net income. So here you are, you've got your sales revenue. And here's your net income. Oh, good. We've got at least 3 items under the income statement: the salary expense, the net revenue, the net income. Any more expenses? No, I don't see any right now. Retained earnings. Where do retained earnings show up? You look, retained earnings show up on the balance sheet. Now, I'm just doing this without any notes. Why don't you take a look and see if I'm right? Net cash provided by operating activities. Net cash used for financing activities. These two, when we're talking about cash, statement of cash flows. Remember, there are 3 ways in which the company generates profit. One is through operating activities, one is through investing activities, and the other one is through financing activities. Let me see where we are now. Accounts payable. What is an accounts payable? Accounts payable is something that appears on the balance sheet as a liability. Great. Share capital. Share capital. Something that is under a balance sheet. Very good. Interest revenue. Interest revenue. Again, this is a revenue and it shows up under income statement. Long-term debt. Long-term debt shows up under the balance sheet as a liability. Then net increase or decrease in cash. Well, it sounds to me that is something that is a statement of cash flows. So why don't you compare what I've gone over for question 14 and see how you did. Now let's go into the next item, and I believe it's number 15. Let's see if we can get to 15. So basically, let's see how much you understand accounting based on what we've done so far. I'm sorry, I'm going to get rid of this. So how can a business earn large profits but have a small balance of retained earnings? Give 2 reasons why a business can have a steady stream of income over a 6-year period and still experience a cash flow or cash shortage. You can pick a single source of cash for your business. Which would it be and why? So this one is asking, is it through operating activities? Is it through investing activities? Or is it through financing activities? And then D, how can a business lose money for several years in a row and still have plenty of cash? Well, this to me, see, if you've got plenty of cash, remember you can generate cash through your investing activities and your financing activities, but the business itself operating may not be making any money. So there are ways for a business to do it without doing it through operating activities. As I say, financing and also through investing activities. All right, so that was just a brief overview of 14 and 15. Let's see what we have now for 16. 16. Using the accounting equation, evaluate and also evaluating business operations. So we have these companies. Fresh Produce, Hudson Bank, and Pet Lovers. Let me see if I can get this to help you out. Let's see. Where are we? Oh, sorry. Let me just see if I can shrink that. There we are. So we're going to be using our formula, which is assets equals liabilities plus equity. I'm just going to type this in. So what figures have we been given for Fresh Produce? Fresh Produce, we are not given assets. We have to calculate it. But we're given 9 in liabilities and 17 for owner's equity. And we know the formula is assets equals liabilities plus owner's equity. So we can just do this plus that, and that gives us our Fresh Produce, and so they're assets. Now, just to make it easier to read, we're going to center this. I know you've all had some sort of experience with Excel, so let's make it easier to see. We're going to apply the borders. Here we are. So there's the formula that we've got assets equals liabilities plus equity. Hudson Bank, the second one. We're given assets. We're given the owner's equity, and so now we have to calculate this. Assets equals liabilities plus equity, so 14. And the last one is Pet Lovers. Pet Lovers were given 21 in assets, 10 in liabilities, and equity, we have to figure that out. So let's put in the formula, and there we are. See, was there another part of the question? Yes. Which company appears to have the strongest financial position? And explain your reasoning. Let's take a look at what we have. Well, what you want to do is you want to see, can the assets pay off liabilities? Okay. So if they had to liquidate the business, yes. Yes. Yes, because the assets are more than the liabilities. So how do we decide? Because we've got 3 and they can all pay off their liabilities. What we want to see is which of these, Fresh Produce, Hudson Bank, and Pet Lovers, has the largest proportion or percentage of equity in assets. And so this one, now this is about half. This one is half. But this one, very, very strong. So which company is the strongest? The answer is fresh produce. Let's go back and see over there. Which question is next? Number 17. What does number 17 say? Number 17 says, using the counting equation and evaluating operations. So so it's asking us to write the counting equation, figure out which resources does Homebron have to work with, which to me means assets. How much does Homebron owe creditors? That's liabilities. How much of the company's assets do the shareholders actually own? Let's take this information and let's do a spreadsheet on it. Okay, 17. See, so we know, let me just plug in some numbers. So what we've got is we've got assets and liabilities and equity, and it's we can just plug in some numbers. Just going to make it easier for me to read. Let's see, there. So it says here for assets, we have current assets of 290 million. Current assets, and then property, plant, equipment. This is a term for fixed or long-term assets, so we've got 490. And the other assets are 150. That's all we have for our assets. Our liabilities are current liabilities. Current liabilities means liabilities that must be paid off in a year. And it says long-term liabilities is 310. So now what we have to do is we have to do some addition. So I'm just going to total up these. So this is our assets. And we also want to apply the same formula to liabilities. So the equity, we know, has to be assets minus liabilities to give us our owner's equity. So there's our equity. So this is what the company owns, this is what the company owes, and this is what the shareholders own. So here we are. And that brings us back to 17. What's next? I think we have question 21. Let's take a look what question 21 is all about. Question 21 is, again, using the accounting equation, prepare a balance sheet. And so 21, it's this Allen Samuel Banking Company, and we're given lots of information. Well, what's interesting, it's giving us information that's not just needed for a balance sheet. Remember, if you look here, they've got expenses, revenue, so we've got enough information to prepare an income statement. Well, using the same information, prepare an income statement and a statement of changes in equity. Well, we might just do that as well. I think I'm going to need more than, I've got, according to this, I've got 13 minutes. I've already used up 13 minutes, and I only have 15 minutes. And so I don't think in 1 minute I can actually do question 21. So I guess I should end this part of the video and save up my energies, and we can do number 21. So I'll see you at the second video for the review questions.